Hello everyone, it's Friday, March 1st. My name is Liam McMahon. I'm a currency strategist here at globalfxclub.com, and this is your daily moving average video. We are going to talk about a couple potential setups for next week. Huge week next week. Cannot emphasize enough how important and also how volatile next week is likely to be. We have the Bank of Canada, we have the Bank of Japan, we have U.S. non-farm payrolls, we have the bank stress test, we have the Reserve Bank of Australia. It's a busy week. That's not even a third of the red flag events that we have going on next week. They're just the ones that immediately came to mind. So you want to spend this weekend getting some rest, I suspect, because we're going to be busy next week. Hopefully lots of good, clean movement to come. We had a great start to this week in terms of volatility and in terms of trading. And then the setup sort of dried out a little bit as the market began to consolidate following those violent moves early in the week. So hopefully next week will spell the beginning of a new set of violent moves that we can trade. So let's take a moment, if you would be so kind, to pause the recording and read the risk disclaimer, which should now be on your screen. And then we will jump to the charts and run through a couple setups that you should keep an eye on for next week. All right, so we're going to start with Kiwi dollar. It still remains, to me, one of the clearer pairs. We had this sort of half ugly head and shoulders pattern. We broke below the neckline. We've retested that neckline here. Almost, I mean, really, if you draw the trend line correctly, it was really a perfect retest. Then lower, and now we've stalled here at this, where now potential double bottom. The end. This is the end, but the weekly pivot support. So we have the level here is 82.25, and up top it's 83.20. That's basically our range, about 100 pips. I still feel that the weight is solidly to the downside. I'm a major fan of selling rallies back up to retest this neckline for an eventual bear flag breakdown. If we jump out to the daily chart, the flag potential becomes a little bit more clear. Let me get rid of these pivots. They're kind of just in the way right now. So we have this major move down here from 85.35 is going to be our flagpole, and here we are setting up the flag. We obviously need a couple more days, well, at least one more day, Sunday, and maybe Monday's candle to kind of chop within this range before breakdown takes us below this 200-day moving average and really opens up some significant downside on Kiwi dollar. So that's definitely an exciting trade possibility for next week. Again, I mean, this could be a move really down sub 80. We might get there sooner rather than later if we get a sort of Kiwi catalyst or even just a bout of risk off. Commodity currencies look weak. They want to sell off. Another example of that, Aussie dollar, basically the same scenario here, putting in this double top, but really what looks like a descending triangle. Eventually calling for a eventual breakdown. I'm still looking for a move back down to parity on this pair. Again, we've got some moving average crossovers going on up here, with the 50 moving below the 100 and threatening the 200. We have this sizable move lower. This area right here that we're currently trading at has been supportive in the past. We will see if it can be supportive for a third time. But if we get below this 101.40 or so figure, I would expect us to see parity, if not lower, again, sooner rather than later. So keep your eye on that as well. Kiwi to me is cleaner. There's more of a range, less chop, but either way, they're going to follow each other one way or another. Pound Kiwi, another example of how commodity currencies want to sell off. Keep in mind this morning we had absolutely horrendous numbers out of Great Britain. We saw the PMI come in somewhere around 47, 47 point something. I can't remember the last time I've seen the PMI number come in as 47. I'm sure I've seen it before, but nothing comes to mind. They're usually, sub 50 is contracting, but usually they're like 48, 49, 48.5. I don't remember a 47 anytime recently, so really not a good number. Which explains this all of a sudden just tank. But look where we tanked to, right to the bottom of where the left shoulder formed. Now we're still putting in that right shoulder. Look, if Kiwi's going to rally against the pound, which has just been beaten to death with every bad economic number, every quantitative easing program, there's pretty much the only bad thing that hasn't happened to Great Britain in terms of its currency recently is there hasn't been a natural disaster. Knock on wood that I'm not jinxing them somehow, but that's really the only negative catalyst to the pound that hasn't occurred in the last couple of weeks. And yet it's holding in there against Kiwi. If pound's going to rally at the expense of Kiwi, expect Kiwi dollar, Kiwi yen, Kiwi CAD probably, Euro Kiwi certainly. The Kiwi just get hammered against all those currencies. The first step is to clear this 100 period EMA and this neckline right around 184.10. Second step is to clear this 200 and this trend line around we'll call it 85 by the time we get up there. Once we get there, once we get above that trend line, it's off. It's up and running. 192 maybe for eventual targets. So very much keep an eye on this for the next really 2 to 3 to 4 weeks, maybe even 2 months as this starts to trade. Of course, if we break back below into new lows, the setup's invalidated. But as long as we're holding this area, be wary of that potential. What else did I want to show you? Aussie CAD, sort of trading in the middle of this triangle. You can see we had a nice pivot, moving average, swing high support area, which caused a brief bounce. Nothing to write home about. Look for a break of the triangle. My preference would be a downside break because I feel there's more downside room than upside room. We're near major highs. But either way, hopefully this chop period in Aussie CAD is coming to an end soon. Pound dollar, again, the pound looks pretty terrible. It looks like it's going to bear flag a little bit right now. Maybe one last thrust lower before a relief rally higher. We'll see. First step would be to get back above this 151 figure. And once we're back above 151, we can start to look to start a little bit of a squeeze higher. But again, the path of least resistance for the pound is certainly to the short side. Dollar CAD coming back down, testing this previous resistance now, maybe turn support. In terms of the daily chart on dollar CAD, still pretty ugly. My preference is still to I don't actually know what this line correlates to. My preference is still buy a dip. Not sure we'll get one. I was hoping that this pattern here would turn into at least a little bit more sideways before we popped higher. But we'll see. Potential that it may be trying to form a head and shoulders here. We dip down to the 4-hour chart. Left shoulder head. Now we just need a right shoulder and a breakdown. If so, 101 is certainly the area to look for next week. If you were in any of the webinars that I've run, you would have heard that already. So that's what I am looking at for next week. The key, in my opinion, is Kiwi dollar. It's the cleanest, and if it breaks, everything else risk-wise is going to go with it. So keep your eyes glued to that chart. Keep your eyes out for the major data that we have going on next week. Of course, if you're in our chat room, I'll be alerting you to it so you know it's coming, and you can keep an eye on Twitter as well. Hopefully that's helpful. Get some rest this weekend, guys, and I will hopefully talk to you very soon. Have a great weekend.